Snipers HQ, where we calibrate the soul. Snipers HQ, where we calibrate the soul. Master the emotion, then we tally back the goal. Confluence rising, look at how the level stack. Sniper discipline, never looking back. Snipers HQ, stay focused.
Yo, what's good, snipers? Your boy Ab, and I'm back with another one, an update. Assalamu alaikum, how you feeling? I feel amazing, incredible. Thank you for asking. I'm gonna get up all in your face right now, real quick. Just get a look. All right. So we got a lot to go over. So let me share my screen with y'all. So I switched my biasness and went with, instead of thinking that the market was going to continue to go down, I stuck with the script, the macro. And so what I mean by that is, well, first let me tell y'all what I've seen. We're going to look at the futures too. So if you look at the structure, look how SPY pulled all the way back to test the 50 MA at 732. It flushed below to sweep liquidity down to the $728 level, but the buyer stepped in with strength, bouncing off the 50. That's institutional behavior. Large funds use this level to defend the long-term trend, right? Look what we was doing. Look at price action in the pictures. You can see the wicks. This is the 50 right here, blue line. So we are creating a higher low. Friday confirmed the higher low. If you zoom out on the daily, the market made a deep swing low 2 weeks ago down to the $722 area on the 4 hour. Look at those long bottom wicks, dip it down past the $732 level and then to the $728 level. Buyers immediately step in and create Buyers immediately stepped in and create the green candle over $735. This proved that the sell orders are being outnumbered by heavy institutional buy blocks. The sellers ran out of gas at the bottom. My target is $772 on SPY. All right. So now, we're going to get into this. Averaging about 4.9. So $722 at around $735.67 at that time required a 4.9% move. Averaging a 4.9% move gain over 22 days means SPY only needs to grind up on the average about 0.22% per day. The risk to reward is 1 to 8. On that, God damn it. So I've been updating my people a lot because I understand that a lot of people are having trouble reading the candles. So I've been really updating them because I'm able to read it very well. Aggressive liquidity sweeps around that 732 area. That was very, very aggressive. Liquidity hunting means stop loss hunting. We did it for about 2 hours, then took that direction we wanted to go. Friday came in, you know how that went. We printed on Thursday, but then Friday came in and it did another liquidity sweep. But if you was watching futures, you'll see we was in the golden zone, and then when we came down here, you see we bounced at the same level we bounced in the week of May 11th. The week of May 11th. Damn, y'all getting to see everything on here, huh? So many people grab puts on that opening. Because on Friday, if you know, when we opened, that thing just was nasty drop. It ripped all the way back up. So I had a target of $737.35. We did not hit that. Retested structure on ES, it did look amazing. And 444.11. I was cooking these past Thursday, Friday, and it's not over. I'm only getting better at this trading. I'm able to read it better and better because I teach people almost every single day. The one-on-ones almost every single week. So it's like I'm constantly teaching. So the more you teach, the more that you find out that you actually learn. Speaking of the one-on-ones, if anybody is interested, for $4.99, did you know that you can get 60 minutes with Ab for only the price of $30? That's right, $20 off, because normally it's $50, but today I tell you what, we're gonna do $30. But no, it's gonna be like that. Anytime you do the level 1, you just pay $5 a month, and every single appointment that you book, $20 off for both durations. So for 1 hour, $30 instead of $50. For 2 hours, $70 instead of $90. Can't beat that. And I give game. I really try to teach you. So for $30, $70, come on, talk to me. Everybody else, they charge $300. And then if you want some of our plays, if you want access to the Zoom, so you'll be able to chat and come in with the family, tap in, or kiki, whatever you feel like doing, for $9.99. This just give you a little boost before you get into the Discord. And I might even do a little perk, like if you in the Alpha Pass, I might give a little discount for if you're going to be joining the Discord. I'll do a little discount. More than likely, that's what I'm doing, because that sounds good. That sounds appropriate, right? I don't want you spending too much money. Times hard, child. Okay, so that's if you want to become a member. Go ahead and get that. What else do we got? So let's pull up something real quick. Maybe I should have TradingView up, right? We're gonna look at TradingView chart. That would be fun, right? Okay. So I don't know if you know, but on Friday we had a nasty liquidity sweep. And that was to $716.58. Was it a glitch? No, it wasn't. Was it a data error? No, it wasn't. Was it somebody big fat finger trying to short the market? No, it wasn't. I heard that they call this like a ghost candle. Supposedly, I didn't fact check it, but this was happening around the .com bubble. So we track. Well, so I track, because I was going to say wait, but we ain't really. Wait, hold on. I'm getting paranoid. Oh, okay, I'm recording. I was going to say wait, but I really didn't have no help with this, so I'm not going to give my snipers credit. I'm going to take this one on. I'm going to take this credit by myself and God. That's it. So after checking the actual time, which was Pat, so I could say we actually, because Pat told me it was 3:59. Fact checked it. Indeed, it was 3:59. It was not 4 o'clock. In the sales logs, there were 4,309 individual block trades filed simultaneously at $760 to $720 in the final seconds of the trading session. This tells us big money purposely went down there. What do you mean? This telling us that this wasn't just a regular downtrend or a market crash. This was a liquidity raid, like that. So remember we talked about liquidity hunting, which is called what? Stop loss hunting, right? Where do retail put their stops at? Behind like moving averages, or your basic areas under wicks and stuff like that. So right below the 50-day moving average, $732.69, and the $730 put, institutions were deliberately triggering a flush to get those weak hands that was in calls for the weekend out, right? And it wasn't just, it was like if you done got in for a while back at the 720, they were stopping everything out. So they could fill their own massive buy orders at a discount right before the weekend. So we know, damn, that candle is wicked. If the bears were truly in control, the market would have probably settled down there on the lows. Instead, it swept that area, and within seconds, the price snapped all the way back up to $728.99, immediately back over to $731.20 after hours. So the retail traders who panicked and chased the short positions probably brought puts because they had time, because you got to like 410, 415. So they bought at that bottom of the wick and they instantly got trapped. I don't know what to really tell them, because that was like that was nasty. That was so nasty. So it's like we already filled the gaps down here. We don't need to. It's not a rush to go down there and come test structure, because we already temporarily took these out so we could get a little nice squeeze to start the July off, and then eventually we come back down here. But this was just stopping all along, because a lot of people was probably going long, getting ready for July and stuff. It just stopped all them out, and then it threw a nasty, vicious bear trap. And I love how it closed back above this structure right here, creating a beautiful high or low. We're looking at the bodies, but this wick tells the story for real. So don't be hoping that it's coming back down there, because that does not mean that. Eventually, yeah. But the institutions definitely trapped you, and now it's a short gamma squeeze trap. Man, the way they set everything up was just nasty. So before I go into everything else, let's pull up a sniper economic calendar. Boom. Talk to me. I'll talk back. So let's zoom in on this real quick so I can really see good. So that's fine, right? Fine, right? So for Monday, June 29th, we got Chicago PMI at 10:45 a.m. Then we got Fed speaker events. Markets positioning ahead of jobs week. At 9 a.m., we got Case-Shiller home price index. At 10 a.m., we got consumer confidence, and we got JOLTS job openings. For all of my UAA people, we got Nike earnings after close, so let's see how that sector is going to do. ADP employment change at 8:15 a.m. Eastern time. Then at 10 a.m., we got ISM manufacturing PMI. 10 a.m. Construction spending, and then the big thing, Fed Chair Kevin Walsh speaks, and then we got Tesla deliveries. Constellation Brands STZ earnings is before opening on Wednesday, July 1st, then July 2nd on Thursday. Non-farm payrolls at 8:30, the unemployment rate 8:30, average hourly earnings, initial jobless claims, and factory orders. And then, as you know, Friday, July 3rd is the markets is closed. Low liquidity. Independence Day holiday. So what's the sniper's focus? Non-farm payrolls, Thursday at 8:30 a.m. The most important event of the week. Jobs data will drive rate expectations, bond yields, and overall market direction. JOLTS plus ADP employment. Markets get labor market data all week leading into NFP, ISM manufacturing PMI. Critical read on economic growth, demand, and recession risk. Then Fed Chair Kevin Walsh. Any comments on inflation rates or liquidity can move markets quickly. We got our high impact right here. JOLTS, ADP, ISM, Walsh, NFP, that non-farm roll, unemployment rate, average hourly, initial jobless, and we got some earnings. And then you see your medium. But you know what it is. Stay focused, execute with precision, and we trade pressure. And I'm trying to teach everybody, like, this is nothing. This is good. We don't want to trade environments where everybody else can trade and thrive. We want to be sharks in that water. You know, humans, we can swim good or whatever, but we want to be sharks in that water. When there's blood out there, we want to be able to get through there and get our food. So I like trading markets that's very difficult. Very difficult, because they're going to be the liquidity, unfortunately. We got to think like the institutions, right? They're going to be the liquidity, and we know they're going to tap out. They're going to run, chase the meme stocks and stuff like that. So it's a lot of stuff that we could do to capitalize on this amazing situation that we got here. So now, I'm gonna give y'all a little what I got, right? So what do you see happening? I already gave y'all the 5-month macro distribution, right? Remember, so the market is entering one of the most important seasonal windows of the year, right? Seasonality, I'm not big on. I don't really care for a seasonality, but just watch how I mapped out the 1987 thing. My 5-month macro distribution matches the seasonality chart beautifully. It just makes no sense. Because I don't really care for it because some months different. It's different environment. We're in geopolitical environment. It's not the same. So everything, we got to adapt. We got to move different because things is going to be different. So the market's entering one of the most important seasonal windows of the year. While headlines focus on noise, institutional money is positioning for what could become a 3-phase market cycle through the end of Q3. Phase 1, the July squeeze. So historically, July is one of the strongest months of the year for equities. Seasonality favors buyers. Fresh capital is deployed at the start of the second half of the year, and institutions often engage in a portfolio rebalancing that creates upward pressure on the tape. Man, all these notifications. The recent geopolitical de-escalation surrounding the U.S. and Iran removes a major volatility catalyst and creates the conditions for a relief rally. So from an options perspective, market makers entered the weekend in a short gamma environment. After price closed below the zero gamma pivot around $740 and some change, $740.87. As markets reopen, dealers may be forced to buy futures and stocks to exposure and stock exposure to rebalance delta risk, create an additional upside fuel. The key July targets: $740.87. That's our zero gamma pivot for right now. And our max pain magnet is at 740, but it's going to change. Upside squeeze potential towards the 740 area, and then bullish momentum favored while above major support. And I believe the major support is around 720, 725. The path of least resistance currently remains higher, honestly. Phase 2. I know you don't want to hear this, but you have to hear it. August consolidation. As July strength fades, seasonal momentum typically begins to cool. Liquidity decreases. Volume draws up. If y'all know me from the Patreon, y'all know I used to tell y'all, you had like once August come, I went months without trading. But institutional participation becomes less aggressive. That often creates an environment of false breakouts, failed moves, and frustrating range-bound price action. August is usually less about making aggressive bets and more about preserving capital and remaining patient. August expectations: lower volume conditions, increased market chop, reduced directional conviction, and greater importance placed on risk management. All right, the objective shifts from maximizing gains to protecting gains. And I know it's so hard for some of you guys to do that because you just want to gamble. All right, phase 3, September, structural flush. September has historically been the weakest month of the calendar year for equities. This is where complacency often gets punished. Volatility tends to increase and institutional hedging activity rises. Market participants begin preparing for year-end positioning and macro uncertainty. Options positioning suggests larger downside hedges are beginning to build beneath the market. Key September levels: September max pain 715, major downside wall near $690. Could we go see that area? Increased probability of volatility expansion and potential retest of key macro support zones. If volatility accelerates, September could provide the best short side opportunities of the quarter. Talk to me. Because I'm giving y'all the levels before we even get there. So how can y'all not say you got a roadmap? I'm the compass. July. Trade the long side with the trend. Respect momentum. Allow the dealer squeeze to play out. Please. I know you love something about them puts. I know. It makes you feel good. Gets you that itch. But for now, I just need you to tone it down a little bit. Jump on the other side. August, reduce aggression, protect profits, avoid overtrading in low volume conditions. And I know we will have problems with that, but in our Discord, you will not. So make sure August, you come in the Discord. And guess when we open? August. The coincidence, because we know we're gonna have to throw that fish line out there. Go ahead and help you, right? All right. September, expect volatility. You'll be in a Discord before then, so you don't gotta panic too much. Expect volatility. Prepare for downside opportunities and watch for institutional distribution and larger market repricing. So you already know the mission remains the same. Think independently, but at the same time, you got to be able to see or hear what everybody else is saying, right? Execute with discipline, right? Protect your capital, wait for confirmation, and then execute with precision. All right, boom. So that's what we got. And then you know what's crazy now? When I gave this article out, let's see when I gave it out, because you probably didn't read it, so I know I'm gonna have to read it for your black. You know how black people is, y'all don't like to read. But this was June 9th. So my decoding the 5-month macro distribution trap, and you even have this beautiful visual thing here that you can go ahead and read yourself. This is the 1987 playbook, baby. Talk to me. So go ahead and check this out. And if you don't know, at Sniper's Command, and I just shared it, so it'll be right at the top. So if this 5-month 2007 macro distribution pattern is truly lining up for what we are seeing with 2026 monthly chart, then the clock started ticking right now in June. I said 1987 because I've been watching 1987. I've been watching 2007-08 financial crisis. Same thing. That does not mean the trapdoor snaps open tomorrow rising. Big money does not unload an entire institutional book in one session. They transfer risk slowly. They use time, fake bounces, premium decay, the emotional exhaustion to keep retail trapped while they quietly distribute into strength. I had CMOS today, if you're wondering why I'm like this, because it's 10:17 p.m. June is month 1. This is the opening peak, the first distribution candle on the monthly frames. Sellers have already stepped in near the 50,877.10 zone and left behind the upper exhaustion wick, and that is the first warning shot. July becomes month 2. This is where the market can manufacture sharp ring bounces to make retail believe the dip is bought. The crowd starts chasing again. Bulls get comfortable. Premium gets chopped, but under the surface, wells keep offloading risk. Watch how I jump from these calls to puts, calls to puts, calls to puts, calls to puts, calls to puts. August becomes month 3. This is the heavy chop zone distribution phase. Price can grind sideways, fake both sides, and drain traders mentally and financially. And it's already doing that. So sad because we haven't been seeing the worst of it. You guys are already tapping out. WICK! This is where impatient traders blow accounts trying to force the crash too early. August. September becomes month 4. This is where the real pressure starts building. Historical support weakens. The major 50,200 macro shelf becomes a line in the sand. If that shelf starts cracking, the market enters the danger zone. Do you remember me telling you about this? October becomes month 5. October is a very bad month. Based off of history, very, very bad month. Besides Halloween, we had a lot of bad stuff happen in October. This is where the full structural cycle can complete. If price snaps and closes below 50,200, the crash alignment trigger activates. That opens the vertical air pocket underneath the tape and exposes the value lows around 45K. This is why we do not rush. That 1987 crash also matured in October. Black Monday hit on October 19th, 1987, when the Dow dropped 22.6% in one session. Still the worst single day percentage crash in stock market history. That market also peaked in late August, chopped through September, then collapsed once the hidden structural damage became impossible to ignore. That's the lesson. The summer chop is the trap, and we're starting it. We're setting it up. And July is it's about to be one hell of a bullish month. But then after that, you guys still going to be bullish, and I'm going to be bearish. Man. Yeah, a lot of you guys going to become liquidity, unfortunately, if you want to be stubborn. You got to learn to jump from bulls to bears, bulls to bears, bulls to bears, bulls to bears, bulls to bears. You can't just be like, I just want to be a bull, or I just want to be a bear. You just got to be like, I'm neutral, right? I'm a bull this day, but then the next day I might be a bear, right? That's how you got to play it. And even though I still have that bearish inside of me, I don't care. It's money. I feel right to the bull with no hesitation at all. July and August are where they will fake people out. September and October is where the real danger zone opens. So we keep emotional bias silent. We keep the risk locked down, and we do not blow capital fighting daily noise. We let the herd chase every intraday candle while our eyes stay fixed on the structural. Talk to me. If I ain't a sniper, then who am I? A sniper. You better believe that. And if you don't know, we have another sniper that goes by the name of Rams. So he has a website called ramsoffthecharts.com. Again, that's Rams with an S, off the charts with an S.com. And if you don't know, if you are a trader that doesn't know what support and resistance is, or if you just suck at doing support resistance, go ahead and come to ramsoffthecharts.com. You don't have to learn how to chart at all. You can just come over here and then start pressing buttons. But nah, it gives you the support and resistance areas here. But you already know, we go live Monday, we go live Wednesday, we go live Sunday, Monday, Sunday, Tuesday, Wednesday, Thursday, Fridays. But there's no excuse for you not to know what's going on, because we give free game all the time. Tap in with us. We going live tomorrow. Are you going to be there? I hope you are, because we look for live trades, but I won't be day trading because I'm already in place. So if anything, you're just going to learn about new stocks that you can get in. You're going to politic with us, parlay with us, chop it up with the fam, the snipers. And we the only thing that we doing, we buying shares though. So if the shares come in, boom, best believe we getting in there, getting in that water. And I love getting in that blood. So yeah, this website is super amazing. If you want anything about flow, screener, we got it all. The heat map, we got dope code. I mean, we got it all. We got all of this stuff here. So if you need any of that, come here, because guess what? We about to go premium on that ass. And he about to start premium real, I think like this week or next week or tomorrow. I really don't know. We're gonna update this because now we're shifting. We are shifting. So now all of these are getting removed. All of these plays right here, I want you to leave them alone. I'm gonna tell Rams tomorrow. You know, we need to do a removal, and tomorrow I tell you what, we'll start adding to the watch list. That's what we'll do. How does that sound? Good. Oh, hold up. What? Oh, I was about to say, where's my admin tab? You guys don't have this. Perks of a boss. Sometimes. Never mind. All right, let's check futures now. We got through about everything, and if you're still here with me, all praise is due to Allah, because I talk a lot. I don't know how you could just sit there and listen to me. Let's go ahead and see what futures is doing. Dumping on a. Are we flagging here, Jimmy? No, it's a cat. That's a cup and handle. It's like, goddamn it, cup and handle again. Let's go to the 30 minutes so you can see what I see. All right, let's go to the 15 minute. All right, let's go to the 5 minute. I don't know if you can see it yet. Can you see it? Can you see it? Get up close on that skin. Even though my face is breaking out a little bit. Okay, so probably gonna start consolidating over here. Let's check the daily. Do y'all know what happened? No? Nobody told you? Oh God. I always gotta be the one to update y'all. Hold on, come with me. I said, come on. Let's go. So look at this. You paying attention? Look, because I'm going to explain it one time. I ain't going to explain it no more goddamn times. So basically, they set a trap. And I was trying to tell you that it's a trap, right? I was trying to tell you that, but you didn't want to listen. And I said, Trump's going to manipulate the market. But guess what? You didn't want to listen. So guess what happened? U.S. and Iran agreed to pause strikes. Plans talks this week. I don't know who this is, but they might have to go to jail because they be lying. Israel notified the U.S. had a strike. Israel Prime Minister office. And then what else did I see? It was more recent. Come on, buddy. Where are you? Hey, I don't see it. Maybe they... I don't see it. I don't see it. Alright. I don't remember what it was. But that's okay. Anyway, so the market jumped off a little bit. Got a little jump. Look how it just boom. It just took right off. But now look, we're getting a little rejection over here again. More liquidity on. Oh God, just print already. So we're in the golden zone. So if you're trying to short this, you need to be very careful because you're bugging. We getting them wicks down there or whatever, and now we setting up shop. Let's see how our moving average is looking at. Because I'm gonna tell you. Ooh, talk to me. Yeah, we're going up. Yep, we're going up. We're setting up. 200's flat. 100 isn't declining too hard. The 10 is holding as support. Given time, letting the moving averages come down to price can catch up. Then we jump on top of the moving average. The moving averages moves us up. So, huge cup of handle right there. You better hope that thing don't play out. If that thing play out, they better pay out. You feel me? You know what I mean? Yeah, I used to rap back in the day. I still be throwing the loss on here and there. Not too much, not too crazy. None. So this is NQ. NQ doesn't look as good as ES. Getting a little rejection there. Nice little trap. We got buyers down here at the bottom. I don't really see us going nowhere. We letting these moving averages catch up. The moving averages, like I said, they're not aggressive. Look at this. They're not aggressive at all. We'll eventually be able to pop back above that as long as this floor holds. So I like SPY and QQQ to potentially. I like the market to potentially gap up tomorrow. We got to see how that is. And then our Mag 7s. Let's go through them. Let's start with Google. So Google's at the 200-day. On the 4-hour, it's at the 100. Oh, it's at the 100-day, and it's between the 200. 314 is probably the bottom on Google. Honestly, around this 100, buyers probably gonna step in as soon as 9:30 opens up. We'll probably get a rip up. Long story short, the target for Google for now is 358 and potentially 373. 350. Wow, this is nice structure. The weekly closed right on the structure right here. This was nice. But we need to gap up though because it's pressure of sellers pushing down on it. So again, if you wasn't listening and if you're just not joining late, well, no, we're not live, so I can't even go there with you. All right, so $358 the first target, and then $370 the first target on Google. Overall, I like Google right here. I don't see it going too much further down. 315 is what I see to the downside. So let's see. I've been pretty sharp every time I give my Mag 7 updates. If y'all really listen and stuff like that, I'll be doing my thing on these things. So Apple, look, nice retest down to the 20 on the weekly. I like that. So for Apple, I got to hurry up, get off of here. I got $296, and then $296. Then for Meta, I see about 580. Meta is 580 to 613. Meta is never too good. Microsoft. Oh, I gotta hurry up, get off here. This is intense. $400 and then $438. Will it cut off of me while I'm on here? Because then it won't save and I have to do the video all over. So then I got $400 for Tesla. is the first target, and then $408, and then NVIDIA. I'm such a dangerous person. I'm such a badass. I love it. $200 I got for NVIDIA, and sorry, hurry up. $206 I got for NVIDIA. $206. So that's all I got for NVIDIA. That's all I really see. And am I done with the max? I better be done. If I'm not done, I'll be pissed. All right, I'm done. All right, that's all I got for you. Okay, bye. I see you tomorrow on live. Bye.
Sniper discipline, never looking back. Snipers HQ, stay focused.